What if I told you that most millionaires didn't get rich from the stock market, crypto, or lottery tickets? They built their fortunes through real estate? In this video, we'll explore the 4 proven methods that ordinary people use to become wealthy with property, even if they start small. 1. Buying and holding rental properties, the long-term wealth builder. Let's start with the most reliable and time-tested method, buying and holding rental properties. This is the classic path to wealth in real estate. The idea is simple. You buy a property, rent it out, and hold on to it for years while collecting monthly income and watching the property's value rise over time. Here's how it works. You find a property in a growing or stable neighborhood. You purchase it, either with cash or through a mortgage. Then, you rent it to tenants who pay monthly rent. That rent helps cover your mortgage payments, taxes, maintenance, and other costs. Over time, as your tenants keep paying, you're building equity, meaning you own more and more of that property every month. Meanwhile, the property itself usually appreciates. Real estate tends to rise in value over the long term, especially in areas with strong job markets or population growth. So, while your mortgage stays the same, the property value and rent go up, increasing your wealth. For example, you buy a home for $200,000. Over 10 years, it grows in value to $300,000, and your tenants have paid off a large chunk of your mortgage. You've gained $100,000 in appreciation, plus steady rental income along the way. That's money working for you, not the other way around. Pros: provides steady cash flow, builds long-term wealth and equity. Tenants pay down your mortgage. Cons: requires active management. Vacancies or bad tenants can cause short-term losses. This strategy is perfect for those who want passive income and are patient enough to let time do the work. It's not flashy, but it's the foundation of how most real estate millionaires got started. 2. House flipping, the fast cash method. If you want quick results and enjoy hands-on work, house flipping could be your ideal path. This strategy involves buying an undervalued or distressed property, renovating it, and selling it for a higher price, usually within a few months. The goal is to add value and profit from the difference between what you paid and what you sell it for. For example, you might purchase a fixer-upper for $150,000, spend $30,000 on renovations, and sell it for $230,000. After taxes, fees, and interest, you could earn a $30,000 profit, all within a few months. However, flipping isn't as easy as it appears on TV. It requires smart budgeting, accurate repair estimates, and understanding market timing. Overspending or selling too late can wipe out profits. Pros: fast returns, great for active investors, and builds renovation skills. Cons: risk of losses, requires time, effort, and capital. House flipping suits people who thrive on action, finding deals, managing renovations, and moving fast. Done right, it's a powerful gateway to bigger real estate success. 3. Real estate syndications and REITs, the passive investor's path. Not everyone wants to be a landlord or spend weekends fixing kitchens, and that's totally fine. For those who prefer a hands-off approach, there are 2 excellent options: real estate syndications and REITs, real estate investment trusts. Let's start with syndications. A real estate syndication is when a group of investors pools their money to buy a large property, like an apartment complex, office building, or shopping center. One experienced investor, called the sponsor, manages the project, while others contribute capital. For example, you invest $10,000 into a syndication project that purchases a 100-unit apartment complex. The sponsor handles everything: management, renovations, and rent collection, and you receive a share of the rental profits and appreciation. It's like owning a slice of a massive property without having to manage anything yourself. Now, REITs make this even simpler. A REIT is a company that owns or finances income-producing real estate, like hospitals, apartments, or malls. You can buy shares of a REIT through any stock brokerage app, just like buying shares of Apple or Tesla. REITs pay regular dividends from their rental income, making them a favorite among passive investors. Pros: 100% hands-off investing. Affordable entry point. Start with as little as $10 to $100, diversified across many properties. Cons: less control over your investment, lower returns compared to owning property directly. If you want to earn real estate income without managing tenants or taking out loans, syndications and REITs are ideal. They're the bridge between the real estate world and the stock market, offering stability and passive growth. 4. The BRRRR strategy. Buy, rehab, rent, refinance, repeat. Now, let's talk about one of the most powerful and scalable methods, the BRRRR strategy, short for buy, rehab, rent, refinance, repeat. This method lets you build wealth fast by recycling your money and reusing it for new investments. Here's how it works. Buy a property that's undervalued or needs repairs. Rehab it. Fix it up to increase its value and rental potential. Rent it out to tenants, generating consistent monthly income. Refinance the property after the rehab, pulling out your original cash investment based on its new, higher value. Repeat the process with that same money on another property. For example, you buy a property for $100,000, spend $25,000 fixing it, and its new value becomes $125,000, $160,000. You refinance it, pull out most of your cash, and rent it for steady income. Then, you use that cash to buy another property, repeating the process. This approach allows investors to grow their portfolios quickly without constantly saving for new down payments. Over time, you end up with multiple cash-flowing assets, each increasing your income and net worth. Pros: reuses the same capital multiple times, builds both equity and cash flow, scales wealth faster than traditional rentals. Cons: requires good credit and financing options, more complex and time-intensive. The BRRRR method combines the best parts of flipping and long-term investing. It's not for beginners with zero experience, but once you learn the system, it's one of the most effective wealth-building tools in real estate. Bonus tip: leverage, the secret power behind real estate wealth. Here's the hidden reason real estate creates more millionaires than any other investment. Leverage. Leverage means using borrowed money, usually through a mortgage, to control a much larger asset than you could buy with cash alone. For example, with $20,000, you could buy $20,000 worth of stocks. But in real estate, you can use that same $20,000 as a 10% down payment to buy a $200,000 property. If that property grows 10% in value, you gain $20,000, a 100% return on your initial cash. That's the magic of leverage. Choose what matches your personality, time, and risk tolerance. There's no one best method, only the one that fits your lifestyle. Don't forget to hit like, share, and subscribe for more.